Welcome back, everyone, to NYU Grad's daily podcast on Wednesday, October 25th. I hope you're having a good day. It was a crappy day in the markets, though, and let's jump right into it. As usual, I'm starting with breadth numbers. Today, we had 52 new highs on the NYSE, NASDAQ, and Amex collectively, 52. We had 1,227 new lows. This is becoming a habit. And I told you guys whether the Dow was up 300 the other day or up 100 or down 300, this breadth divergence is really important. We had 21% advancing versus 74% declining. Right now, we have 83% of shares under the 50-day moving average, and we have 200 shares below its, we have 78% of shares below its 200-day moving average. So still not a good picture there. I want to talk about moving averages because I've been mentioning, if you follow me on my podcast every day, I keep mentioning as we lose participation from the Magnificent Seven, have been saying, hey, oh, look, we only have 5 trading above the 50. Oh, hey, look, we only have 3. Now we only have 1. We're down to 1. Microsoft is the only Magnificent 7 still trading above its 50-day moving average as we speak. So that's not good. Amazon is already below its 50-day, but they report tomorrow. And Apple reports next week. But to give you kind of a picture, Microsoft was up 3% today. NVDA was down 4%. Google was down 9.6%. Alphabet was down almost 10% at the close. It was down over 10% intraday. Meta was down 4% before the earnings release. And I can report Meta is down from their earnings after the conference call. I don't know what's going to happen tomorrow. Apple down 1.3, Amazon down 5.5, Tesla down 1.89%. So this is no joke, folks. This is time to really investigate your portfolio, look at your 401k, and I don't know how often you talk to your financial advisor, but you should probably be talking to them quite often, maybe weekly, if they'll take your call. Because typically they're gonna say, "Hey, the market is down 20% off its highs. Don't sell. It's the end of the year. Don't sell. It'll come back." That's what a lot of advisors say. So if that's the case, you may need to look for a new advisor in 2024 or learn to trade yourself, because it's time. This is the time to really start looking at where your money is, because I'll tell you right now, if I want to simplify the market for everyone, and I'm going to go through all the nuances, but if Apple loses its 200-day and sells off, the market is done. We're going to retrace back to potentially where COVID lows were. Okay, you might think, oh, you're out of your mind. COVID's not a thing anymore, blah, blah, blah. Correct. But all the largesse that was created during the COVID pandemic, all of that debt, all of that funny money, inflation, is going to get sucked out of the market. And while that's happening, the pain is going to be so bad that people are going to enter the exits all at once. Okay? And if it's not Apple, if it's not Amazon, if it's not Google, NVIDIA, Tesla that are holding up this market, then what will? Where can you, as a money manager at Vanguard, allocate $10 billion? Or at Goldman, or at Citi, or wherever? What are you going to buy on Thursday that you can quickly reposition and reallocate out on Friday? What? WeWork? Bitcoin? This is going to get, and I said on Substack Notes, here are the ingredients that you need to see before a real rally at the end, to the end of the year, Santa Claus rally. Let's all, hold hands and dance and go buy a Ferrari or a Lamborghini, because you need doors that go like this, right? The only way that's going to happen is a couple things are needed. One, you have items or stocks like Apple, Amazon, Google, Microsoft rise, increase, and rally 30-40% to the end of the year. If nothing else participates. If the Shopify's and all the other companies don't participate, you're going to need the magnificent 7 to 5 rally 30-40%. In addition, you're going to need to see yield, the 10-year treasury and other yields too, fall. But looking at the 10-year treasury, you need to see a market difference, a fall below 4.5% immediately. Or you need to see 51% of the market creating new highs. Not what you're seeing every day that I've been reporting, where it's like 50 new highs and 1,200 new lows. Like, those things have to change. If they don't, we're going to simply backtest some of the support levels we keep breaking and continue to sell off to the end of the year and potentially into 2024, because who knows what's going to happen there, because now we're into the meat of corporate debt horizons where they need to roll over this debt. If you are a Silicon Valley tech company, you have debt of millions of dollars that need to roll over from 2% interest to 7% interest. And when it does, they're not going to be able to pay payroll, their bills, their vendors, and a couple of things are going to happen. They're going to go back to VCs and private equity, and they're going to have what's called a down round, where we'll give you more money, tech company, but last time we did the fundraising in Series C at 300 million, we're going to give you the money, but we're going to value you at 100 million. And I'm going to take a much bigger cut of your company. That's what a down round is. That's going to happen. You're going to see more layoffs across the board, whether it's in tech, manufacturing, like with the strikes right now for the UAW, transportation. The transportation index is horrible right now. You see all of these closings for pharmacies like Rite Aid, CVS, Walgreens. It's going to get much worse if those ingredients don't reverse the market right now. Just kind of taking a look at the intraday action here. I posted today at 9:45. If we don't backtest 4240, watch out below. We did backtest 4240 on the ES, which is good. It delayed the sell-off. At 11 o'clock, I posted there were 53 new highs and 807 new lows while we were trying to bounce. Okay? This is what I mean. We're trying to rally. We're trying to backtest 4240, and yet there are 807 new lows before lunchtime and only 53 new highs. This is why you must watch breadth every day. It just got uglier and uglier in the afternoon. Typically, in New York time lunch, it seems to always be a bullish impulse. We didn't have that today. And at 1 o'clock, it was just really bad. At 1 o'clock, the Dow was only down 42. The ES was down 1.2%. The NASDAQ was down 2% at 1 o'clock. at which time NVIDIA was down 3.1%, Amazon was down 5%, Google was down 9%, Meta was down 3%. That was at 1 o'clock. And it just got uglier from there. Breadth volume started to accelerate to the sell side. And to be quite honest, on days like this, it's good to buy calls. And why do I say that? I'm not saying to buy calls to go long in the sense of like I want to make money on the long side. It's more like if you're already short, today was a great day to buy calls to hedge your shorts because they were cheap because everything was crashing. I posted before the close that I believe that Meta will beat expectations because all of Wall Street has lowered expectations for this quarter for earnings and revenue. So they beat. But I also felt that this news would be sold off. So we'll see what happens tomorrow, but it definitely got sold off after the earnings conference call. Yeah, this is just an ugly, ugly tape. If Meta continues to sell off, expect this to go as far as the 200-day moving average, which is at $249. We closed today. Let me get my phone and get real time. I'm not logged in right now. We closed at $299. So if we continue the sell-off, expect basically a 40-point sell-off in Meta. I just don't see how their earnings were good, but they're losing so much money on the metaverse. It just doesn't make sense to me. It's like basically their own Cybertruck issue. That's all I really have to report. What was strong, just to give you a summary. Volatility. Microsoft is the last one standing above its 50. Energy was strong. Yields were strong. What was weak? Communication services as a group was down 6.3%. And of course, that's going to include some big names in there, obviously. I'm not going to rattle off all the red on my screen, but I'll give you a few. Affirm Holdings down 14.9%. Google down 9.5%. Block, which is ticker symbol Square, SQ, down 8%. AI down 7.6%. Shop down 7.3%. Wayfair, W down 7%. Carvana down 6.9%. Sweetgreen down 6.8%. MongoDB down 6.4%. I can go on for hours. So ugly tape. Keep watching earnings. Keep watching yields. Watch Microsoft. Watch Amazon because they report tomorrow. There is some economic data coming out later this week that you're going to have to navigate. Taking a look at the calendar here. So on Thursday morning, which is Thursday, tomorrow, depending when you're listening to this, GDP comes out at 8:30 on Thursday. Initial jobless claims comes at 8:30. Durable good orders 8:30, and then Friday you have PCE and core PCE numbers coming out Friday as well. So that's about it. This is getting really serious. I expect some attempt at a bounce, but until I see those ingredients, and I'll repeat, you want to see breadth improve where you have 51% of the market trading above its 50-day moving average, and you stop seeing this imbalance of new highs versus new lows where you have only 50 new highs and 1,200 new lows. That's bullet number one. Bullet number two is you'll have to have some of the Magnificent Seven rally 30 to 40%. Those are the ingredients and volume, right? You need to see volume to the upside. Other than that, we're going to continue the sell-off. I'll see you guys after the Thursday session. Later.